nothing to risk. Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the fantastic Friday. It is the June 5th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. If you can't dial in, we've got you covered there too. Let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fantastic, fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we got all the indices in the green. They're quite well into the green. The Dow's up 942, 3.5%. The S&P 88 points, nearly 3%. And then NDX 100, 2%, 195 points. Russell nearly 5% at 66 points. So mean and green across the board. To the downside, spot volatility index, you would anticipate and expect that, trading out at 24.26. Gold is off $43, trading at 16.83. Still really within its consolidation parameters. We'll take a look at that. Silver down 56 pennies, trading out at 17.50. Hasn't broken a key level of support, not yet. Light sweet crude is up nearly $2, trading out at 39.33. Natural gas back 2 pennies. The 30-year Treasury is off more than 2 points. She's trading down at 171.25. Leading the charge the upside dollar-wise, it is Booking Holdings, $87. Transdigim Group, 25. Intuitive Surgical, 26. Fleet Core Technologies, 23. And Paycom Software up 19. Shakers are MonGodB. MDB is a ticker symbol off $17. Zoom Video down 9. eHealth Inc. is down $1. Shopify is off 8. Quidel Corp is off $8. So not really anything majorly moving to the downside. Let's do this here. A number of questions, 8, 9 questions so far, and I want to be able to field each of them. So let's first just kind of an overview of the markets, where we're at, and what to be paying attention to. First, let's just take a look at this morning's action out here. I heard Tommy mention, and rightfully so, that the NQ after the jobs data moved lower, where the other indices moved higher. But none of you were fooled, were you? Not a single one of you were fooled by that move, because what you were watching unfold at that time was what? The NQ, this is the 30-minute time frame chart, doing nothing more than really two things. One, coming back and testing its breakout support level. That's 96.25. You'll see this 96.25 area out here. This is not a swing point. This totally changes the game using the system, using the TD9s, and being able to objectively understand where price had broken out and where price had broken down. Totally gives you so much, reveals so much information to you. Now, at the same time that the price was testing that level, 96.25, the CNQ was also in bar number 9 of a TD9 count out there. Hey, look, you take a look at the last TD9 count bottom, That's one we looked at a couple days ago or yesterday. That took place at about 3:30. Maybe it was probably yesterday out there. So you want now. The reason why I'm bringing it to your attention, if we take a look at the 30-minute time frame chart now, we'll see that the bar that completed at 1 o'clock was bar number 8 of a TD9 count. As long as this current bar closes above, now this is going to be at 1:30, and the close above, it must be above. Come on, work with me here. It must be a close above 98.09. Closes below 98.09, even by one tick, there won't be a 9-count pattern. Now, the reason I bring that to your attention is because we may be seeing at least some type of short-term top here. May have already formed, may be formed by about 1:30. It could always be by that 2 p.m. session. And maybe a bit of a pullback before the market probably closes up at its highs today. That's more like that seems to be. Now, the market will tell us whether it's going to. First, on a pullback in the NQ, it's got to get below Stevie's green line, which is down at 97.78. Now, what you'll see out here for the 30-minute time frames is you're going to see, in essence, similar patterns. When I say similar patterns, we're really now taking a look at the high that is out here inside the ES. You'll see that's on bar number 8. So its TD9 count is already in place. We can see that prices above a bearish structured profile. This would say that the pullback, if it continues to pull back, should find support between 31.79 and 31.87. If price closes below 31.79, then that's going to suggest that price is going to move back to 31.64. We're not there just yet. Does it have a topping pattern? Yes. Is it got so we've got a resistance level, the high of the day, but has this broken through any level of support, even on the short-term time frame? The answer is no. But at least you get a feel for what the market is doing, what it's communicating to us. If we take a look at the Dow equity future contract, you're going to see that it topped with the bar following bar number 9. Remember, it's bars 8, 9, the bar following 9 that we focus on. This is trading within its profile, but still above Stevie's squiggly green line at 27.122. Any move below that, and that support, any move below that should bring price back to about the 26.949 level. And the Russell 2000 up nearly 5% out here, but it exhausted itself on that move, and it did that with what? With that TD9 count. The bar following bar number 9 right now, we see that the Russell is pulling back and testing Stevie's green line, a bearish structured profile. So it's probably the Russell that gives you the most important information during this next, let's call it next 45 minutes, while the NQ is trying to firm up that TD9 count on its 30-minute time frame chart. So that's what took place this morning. That's what's going on now. Interest session. You want to know, hey, what's going on in the bigger picture? Well, we just covered the 9 counts out there. I'm going to pull over this chart right now. Chart's not actually a chart. It's a table. It's a table that subscribers receive in the evenings or in the mornings or both out here. And this is just simply a table that uses the same tools that you and I look, only puts it in table format. But it does better than that. What it does is it highlights where we have potential top and bottom signals. Now, the columns I want you to focus on are the ones with the 8s. The daily TD9, you'll see what they've got pink meaning we're up at the resistance level. And when there is a star next to an 8, like in the Dow Jones Industrial right now on a daily basis, that tells you that's a valid signal. When I say valid, it means that the high is formed on either bar 8, 9, or bar following on. Well, in this case here, it would be bar number 8 out there. Now, what I really want you to focus on, because we're coming to the end of the week, and look at how many TD9 counts we have on the weekly basis. The NDX 100, we've got the Wilshire 5000, the NASDAQ Composite, the Russell 2000, the XAU. We've got the QQQ. We've got the IWM. We've got, which sector is this? This is the materials sector. We've got the technology sector. We've got the consumer discretion. Look at all of the potential topping signals. It can be bar 8, 9, or the bar following 9. So you may have a fairly significant top that forms over the course of the next 3 weeks out here. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 915, S&P 87. Let's start tackling these questions. The first one, gold. Let's go to gold here. Jimmy in the Tiger's Den was asking, has gold broken through a key level of support? And gold really, so what I've drawn up here, in essence, are the consolidation lines. And in the consolidation here, you know, kind of sometimes people refer to double tops, double bottoms, triple bottoms, so forth. We're just taking a look at prior swing points or candles where we can see the price has been unable to take out a higher or low. So if we start with the trading session of April 14th, this is for the high, and we just simply draw a straight line across, which is 1789, we'll see that on the trading session of May 18th, price got up to 1787.50. That's close enough for me. There's your consolidation top out here. The consolidation bottom, I've dropped it to the candle from April 8th out there, the low of April 8th, because that really connected in essence to the candle session from April 21st out there, and that happens to tie into the low that we've got. So Jimmy, the answer to, now the nice thing is you know where the clear consolidation is, and why is that a nice thing? Because if a consolidation pattern gets broken, one of the things that it does is it provides us with what's referred to as a measured move. Measured move is equal to or greater than that consolidation. So if it gets broken to the upside or the downside, you then have a price projection. So the downside price projection would be about 1561. The upside price projection, that's not what we're dealing with right now, but we could be, or we may be at some point in time. It hasn't busted through that level out there, the bottom of the consolidation. The top of it is 1921 out there. But as we speak right now, and then when I take a look at some other time frame charts, this is the daily time frame chart. If we look at a 30-minute time frame chart, as price is getting down, Jimmy, to the bottom of that consolidation, consolidation, of course, you know what was taking place, right? You look at a 30-minute time frame chart, forms a hammer candle, which happens to be the bar after bar number 9 of a TD9 count. Now, we've seen the bounce. It's running to Stevie's red line out here. And in order for gold to tell you and I that it's going to hold this consolidation, or is likely to, price needs to close above it. If not, then price is going to pull back and should find support at 1675.60. And if it doesn't, well, then it can test the bottom of that hammer candle. And below that, then we would see a busting out of its consolidation. Now, we'd like to see a true break of the consolidation be more than just one bar, one day out there, but that would be the signal. If I look at a 2-hour time frame chart, that was a 30. No reason we don't always have to stick with the 30-minute time frame charts out here. Here, if you take a look at a 2-hour time frame chart, you can see a TD9 count bottom here as well. So all that makes sense to me with regard to what gold is doing. But that 30-minute chart is the one that's going to communicate to you, Jimmy, whether the bottom of this consolidation may be in, and we just don't have that piece of information, not as of 1:21 in the afternoon. So I hope that helps you out. We had a request from John in Stamford, Connecticut. John, thanks for writing in. And John's question is, let me switch over to some other charts out here. Radio show charts. I want to get your opinion if this is a good time to go short GPS, the gap at this price. So, and John goes on to talk about some of the reasons why. But let's just, because we have so many questions, I'd like to just go ahead and pull over the gap chart and let's just see what it's communicating to us and answer your specific question. Your specific question, is there a reason to take a short trade in the gap, GPS to the ticker symbol, right here, right now? And our answer would be no. And our answer would be no for the following reasons. One, I don't have a topping pattern. One of those topping patterns would either be the completion of an A to B equals CD. There's an A to B equals CD, but I don't have the bearish reversal candle. Now, today's candle is showing up as a hanging man candle. And yes, there are chartists that will tell you that is a bearish reversal candle. It's not the end of the day. I say good luck to you if you want to use the hanging man as a bearish reversal candle. You're going to get your fanny handed to you. That's the only thing that's going to happen with a hanging man out there. So I don't use that. I'm aware of it. But I've also done the research on that to say, holy shnikes, don't do that. Don't do that. Where you might be interested in taking that short position, John, would be up at resistance. Yeah, ideally, you'd see a pattern complete at that level. And that level is very specific. It's $13.99 when we take a look at the daily time frame chart out here. So without a pattern in play right now, I'd have to use some kind of crystal ball, and my crystal balls don't work as well as the patterns out there. So let's just stick with the old pattern. If I look at a weekly time frame chart out here, what does this tell us? Shows us a nice Rhodes momentum indicator bottom. So this shows us the bottom back around May the 15th out there. Price right now is above the top of its daily profile, and it closed above 1168 today. John says, not a chance, says this thing can make a move up to the 1850 level. It's a TD9 count to breakdown level on that time frame. On the monthly time frame, price is right up at resistance. If a counter trend rally was going to end, it's right here, right now, but it's only the 5th of June. But price is up at resistance, so it's why it's stalled here. But I don't see other than this, and that's not good enough for me. I don't think it's good enough for you either. I'd sit tight. I don't see the trade here to go short the gap. The other thing I would throw out to you, John, is probably not a great idea to short a $12 stock. If you're going to go short, you want 50 or above, 100 or above, 200 or above, but you don't want $12 type of a stock out there. Granted, maybe it pulls back to $7 and you're saying, geez, that was like a 40% move to the downside. It's just too risky. It's too risky. And I would say it's really risky to be shorting low price stocks. I want you to think about the actual environment that we're in, the real environment that we're in, the outside environment that we're in out here, and the number of stores that are going to file for bankruptcy, maybe going to consolidate and be bought out. And if you got cheap money out there, it's and the Gap could be one of those stores. Yesterday I returned some items that we have ordered by mail, and decided instead of returning them, I wanted to go to the mall. So I went up to our mall, Town Center Mall in Boca Raton. pretty high-end mall out there. And all the major tenants, well, those that are still open, were there. And you could almost shoot a cannon through it. Now, look, folks, I've been there on a Thursday afternoon many times before, and it's never this empty. The stores throughout there, as I did just kind of a mental count, probably 40% of them still haven't opened. I mean, the doors are closed, nice little sign on the window and so forth out there. So I think what you're going to see here is a number of consolidations, purchases, acquisitions that are going on out there. So I'd really stay away from low-priced stocks out there. So I hope that answers your question. Tim writes in, and Tim says this market seems even more dislocated than before. I'm long the semiconductors, wondering where we see upside resistance. So let's go take a look at the semis out here. Let me do this. I think I had tried to prepare for Tim's question. Let me go to the semis. I think I did. Yeah, I did. Okay, good. So Tim's asking a great question. Where is resistance? Well, other than me trying to go create some horizontal trading ranges out there, which I don't have the time to do right now. The only thing, and we're trading above its all-time highs, Tim, I'm just using the expansion of swing points, the Fibonacci expansion from the high of February 14th down to the low on March 18th. And the 1.272 expansion level is going to take us out to 2187. You're 2023 right now. That's, I believe, where its next stop is. I don't have resistance other than trying to create some type of horizontal trading range boundary set of lines out there. Steve Rhodes with TFNN. We'll be right back. Back in the day, I joined the Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we were taking a look at the semiconductor index before we went to that break, and granted that Tim is in one of the double or the triple ETFs out there. But Tim, in order for me to really get a gauge as to where the market might be headed to, I've got to take a look at the underlying instrument, not the double, not the triple, but the instrument itself. And I'm taking a look at the semiconductor index. And so that was the value that I gave you there. Here, I did pull up the horizontal trading ranges. This is a tool taught to us by Bud Rolfs, and they can act as these horizontal trading ranges can act as price targets, support, and resistance. So 2075 is the daily time frame for that. I hope that helps you out. Jared writes in and asks the following question, which is, do you think today's pullback is a good entry for platinum? And that was around 10:30 in the morning. So what Jared is looking at here, I would imagine, might be a simple trend line. A trend line coming from the low out here on April the 21st, and then that trend line hitting the lows on May 13th, and price pulled right back to that. Now, price is trading below the top of its daily profile. That's at 802. So is it the ideal time to come in on a long trade? I'd say we'd have to see some type of bottom signal on a shorter term time frame, like the 30-minute chart out here. The better entry point would be the bottom of its bullish structured profile, and that's a 785 area, 785 to 802. But let's pull over the chart on platinum, my other charts out here, see what they are communicating to you and I, Jared. So this is the daily time frame out here, and on the daily time frame, we've got the Gartley sell pattern. You can see the A to B equals CD was confirmed with the bearish engulfing candle. Prices below Stevie's green line. So today's test, even though it held a support level, it also held a resistance area, 869.50. So now I'm confused, right? The ideal buy for you, would be 718.80, and that's a daily time frame breakout, which has held and was tested way back around April 20th or so. Out here, you can see that on the chart. So I just sit patient right now on that. Let me put up the weekly chart. Is there anything that shows up here on the weekly? No, nothing. On the monthly, no, nothing. Oh, that's because I've got the current contract. I have to go to the continuous to try to get anything else. So I'm going to suggest that you sit tight. Sit tight. See how 780, I don't have the 30-minute time frame chart. That's the problem out there. But you know what? We can do that. I think I can do that. Oh, I have to change that. Okay, so let me do this here. LL, that's for the next one. And let me just change this. Platinum, the September contract, the July contract, that's still the active. And I want to be able to do is pull over a 30-minute time frame chart. And because, what I don't know is if Jared's just looking at this as a trade, maybe just a short-term trade or something. So let's do what I said I was going to do. I always like to do what I say I'm going to do. And look at the 30-minute. What's a short-term time frame chart telling us? Is there any kind of a pattern down here? And I'm sure I can find an A to B equals CD pattern. That wasn't exactly what I was looking for. I'm still going to suggest that you sit tight out there, Jared, with regard to platinum out there. Thanks for writing in, and have a great weekend. Sylvia wants to take a look at LL is the ticker symbol. So let's go pull that over here. Now, I don't know what LL is, so I should probably get back here, look at my 3 time frames, type in LL, see what we've got. It's lumber liquidators out there, trading out at 11.59. It's traded right into. So your question is, you purchased at $9.30, nice trade, and see resistance at 12.59. And I would say you need to see resistance at 11.84. That's neither here nor there, or so, as you say, or so. And maybe there's a 9 count. So we'll go take a look at the daily time frame, see what type of patterns show up for lumber liquidators. But it's the 1184 level that is the top of the weekly profile that has been tested and rejected. And that's really your resistance level, just the weekly price above the daily and the monthly profiles out there. So that looks pretty good. And you've got a nice, you're in at $9.30. You're at 11.57, so that's a beautiful thing. There is no TD9 count on the daily time frame. You're in bar number 4 today. All right, make sure I got the data. Yeah, bar number 4 is today on the daily. And so that looks pretty good. Let me put up the weekly out here, see if there's any additional information on the weekly. We covered the resistance zone, the top of its profile. I want to see if there was anything else out here. There's not. It formed that nice Rhodes momentum indicator bottom signal. Well, this is going to be week number 8. Maybe you were looking at the weekly. I'm going to go with Sylvia. You were looking at the weekly. This is going to be bar number 8 of a TD9 count, right at that resistance level here. So I wouldn't exit the position. Know that you're at resistance out here. With regard to stops, just recognize that the average true range on this is 78 cents out there, and your stop would need to be greater than 78 cents. Otherwise, just normal daily volatility could throw you out of a trade. You don't want to do that if you're really trying to stay long lumber liquidators. But at this stage of the game here, everything looks pretty good to me. The next question is coming in from Dennis. Dennis says, could you please show price targets or resistance levels for these positions I currently have? Well, I don't know if I can do all 4 of these, Dean. So let's take the first one out here. Maybe we'll try to do. It's 1:36. There's still a bunch of questions out here, but then I'd like to get to everybody's questions. But you're talking about Boeing is one of them, and Ford is another. So for my buddy Mark Fields, we'll certainly do Ford for you. So we'll give you a 2 for Ford. Mark lives and his wife live just across the water on the other side of the Intercoastal. So let's take a look at the daily time frame out here. In the daily time frame chart for Boeing, you're looking for price targets. So price targets, we'd be looking for some kind of resistance level. On the daily time frame, that's going to be 297.44, and you're at 210 right now. So that's a resistance level. Price above the daily profile. That's its TD9 count breakdown level. On a weekly time frame, price above the top of its weekly box. I don't have a good resistance level other than that, in prices above that. And on the monthly profile, the resistance area, and this is going to change here, Dean, is going to be about 276. That's Stevie's green line has turned red, tells us that price and that line should catch up to each other. So in this case here, the message for Boeing is that it wants to continue to trade higher and tag that red line between where it's at right now at 210 and the 276-ish area. So that's Boeing out there. And let's go take a look at Ford Motor Company. Ford right now is trading out at 742 or close to that level. And with regard to resistance areas, well, it just closed or is trading above one right now. And that would be $6.97. So it's trading above that breakdown area. And this says the next price target is 815. 850. Once you break above a level of resistance, then you tend to gravitate to the next one. And so from a numbers standpoint, that's 815. I don't see any topping signal in Ford as we speak right now. On the weekly basis out here, a nice weekly bar for sure. And with regard to resistance, it's 933 out there. So, Dean, I hope that helps you out. I'll save your email, and if we've got time, as I get through all of the rest of the requests out there, we can take a look at GE and Marathon Oil. Paul writes in and says, looks like interest rates are rising. TBT, TBT, TBT. Yeah, it does look like interest rates are rising out here, but let's go take a look at the 30-year Treasury bond. How do we want to do this? Let's take a look at it, see what the Treasury bonds are doing in all of the major currencies out here, trading lower, whether it's euros, yen, or pounds. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we got the current contract for the T-bond futures, the 30-year out here. This is for Paul, who is interested in TBT out here, and we should be anticipating that price is going to find support at 167.13. That is its TD 9-count breakdown level. We can see how this area has been tested and rejected back in the March timeframe. Today's going to be bar number 4 of a TD 9-count. We don't know if a TD 9-count will unfold or not, but with regard to where price should find support, about 167.13. Paul, do not get married to a long-term trade in TBT. Yes, interest rates are going up, but the central banks are not going to allow that to take place for very long out there, because that'll screw up everything in a big way. I'm not saying that it won't happen eventually, but right now there's just be careful out here. So as a trade, sure, I get it. I see it. It's broken through the consolidation. But if you think that the central banks at this stage are going to allow interest rates to rise, which is going to create a sovereign debt crisis like no one has ever seen before, I think you've got another thing coming. And so just be careful out there with regard to that TBT trade. I know how much you love it. Let's take a look at the next question coming in from Scott. Scott writes in, so our government thinks it can print us out of this mess. Can you explain to me how that works? I can't really replace with I can't eat. Yeah, that's true, because I can't afford food. Okay, so so how am I going to answer this? I'm going to answer this. So first, I want everybody to kind of step back for a moment. And I don't mean physically step back. I want to ask you this question with regard to what Scott just pointed out, which is the idea of printing money and that it will create all kinds of inflation or something, or that you can just keep printing money out there. I think, in essence, that was his question. But what have we learned since 2008, since we've seen all types of QE2? Does printing money cause inflation? Does it? Does it? No, the answer is obviously no. It's clearly no. We've had a laboratory experiment here for over a decade now. And so, and here's the thing. here's the thing. I know, Duff, you say it will create deflation, or you're saying it can create deflation. But here's the thing. Here's really the thing. So we know this. This is a market experiment, and we can either choose to ignore it, which I'm not willing to, or we can say, hey, guess what? There's one thing that we have learned. Printing of money does not cause inflation. I know it's hard to believe, but when you really step back and think about it, there's more money put into our country, our environment, through the use of mortgages than by printing money. Sometimes we just think of money as just like if we printed money on a printer and we put it into the monopoly machine, and that's the only way to print money. That is not the fact. That is not at all the fact. Let's take my young kids out here who decide to go out and, they're the millennial group. And they decide to go out and buy a home. And the home that they buy, if they're living in D.C., so we know how much that home's going to cost. One of them, it's over $1 million just for a 3-bedroom condo in a decent area out there. And my daughter's qualified to take on that mortgage right now. But what's she going to put down? So let's say she puts down $100,000. And let's just say that it's, let's say, Scott, that it's you that owns that property. And you're going to sell to my daughter for $1 million. She's going to put down $100,000. Where's the other $900,000 come to? So she has basically taken $100,000 and turned it into $1 million. She's, in essence, put $900,000 into the economy. You see, I know that it just sounds nice, and I know that the folks over on CNBC and Bloomberg and so they just read teleprompters. And then you've got these other guys out there and gals that just don't really, they're not square with you. The reality is, folks, we put more money into, we create more money by mortgages than anything the Fed has ever done or will do out there. No, inflation is caused by, there's a couple different, right? It depends what type of inflation. But the type of inflation that I think you're talking about, the type of inflation that I believe you're talking about, that comes because of a lack of confidence in government. Now, you mentioned the in essence, the riots that are going on out there, the I can't breathe piece of it. And so I'd say, yeah, we have an environment here where we could begin to see inflation across the globe because there is a total lack of trust in government out there. There's the other kind of inflation, right? The other kind of demand type of inflation out there where, you got a supply and demand. You don't have enough supply, kind of like toilet paper. Still, I think today you still can't get toilet. Explain that one to me. I could easily explain to you the printing of money and how printing money doesn't create inflation, and you think that the Fed, because they're printing money, is just screwing up the economy. When are we going to start making people buy homes with cash? I don't think so. Just think of that game out there and how much money is really created through the actual mortgage market out there. So, Scott, that's the best that I can share with you and come up with you because it's the reality of what's going on. With regard to inflation, look, I'm following now specifically, and because of the environment that we're in, and inside the newsletter, every morning people get to see basically almost every commodity that's out there. So whether it's the metals, as I flip through these charts out here, here you've got the platinum chart. We already looked at that. Whether it's light sweet crude, whether it's natural gas, whether it's T-bonds, whether it's lean hogs. Look, if you're trading lean hogs and you want to get access to the newsletter information out here, feeder cattle, soy oil, soy meal, I'm watching this because I'm watching for that type of potential inflation to kick in from a commodity standpoint to start trading the commodity. So that's my best way to be able to explain to you to not get caught up into the cash that the Fed is printing and backstopping. And, a lot of that is probably still just dealing with the repo market, which is the real problem out there. But let's not get into that because I won't be able to get through any of these. Here's a question from Dennis. I just bought RTX. So let me get back over here over on the side. Let's take a look at the 3 time frame. RTX first. Let's figure out what RTX is out here. RTX is the Raytheon Technologies, trading out of 73.14. And thoughts on this from the long term? Well, look, it's trading above the top of its daily, the top of its weekly, and because it's inside the monthly profile out here, your next price target would appear to be 77.29. That is the center of its bear structured monthly profile. It's not to say it can't get to 82.45, but that would be the price target that I would be taking a look at. Let me pull over our other charts out here, Dennis. Take a look at the daily. Let's see if there's any resistance levels that show up. Yeah, you got one at 79.91. So 79.91 is the next mark out there. Weekly time frame, boy, you're right at it right now. And that level is 72.99. I'm not going to worry too much about that one. I'm not going to worry too much about the 72.99 level out there. Steve Rhodes with TFNN. We'll be right back.
Markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets. This is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So during that break, I wrote down 5 different ways that money is created. So write these down. You put these down on your pad of paper. Well, we've got the first way, which Scott obviously pointed out, the direct creation of money printed by the government. So that's a no-brainer. Second would be government debt that's used as collateral for loans. If you have if you've got a bond out there and you need to borrow, you need money, you can put that up as collateral. So that's another way that money is created. Banks creating money through lending. We already talked about that from a mortgage standpoint. How about and I can't believe I even just totally didn't spend any time on this one, capital flows from across the globe. You know, the story that I just gave you about, my daughter buying $1 million home, putting down $100,000 and creating 900,000. Money is really created when it comes from foreign buyers of U.S. assets. I mean, they're then converting their money, euros, yen, pounds, lira, whatever it might be. Then they're taking a foreign currency, converting it to U.S. dollars to buy a U.S. asset. That totally puts money in. So that's the fourth way. And what would be the fifth way, folks? There's got to be a fifth way. What is it? This is where the big problem is. This is why I suggest that Paul doesn't get married to TBT. How many trillions of dollars overseas in emerging markets have been created using U.S.-denominated debt? Trillions. So, Scott, the mere fact that the Treasury, that the Fed has produced $3 trillion, $4 trillion. It's minute. It's insignificant. It's like a drop in the bucket. I believe overseas debt denominated in U.S. dollars is around 17 trillion. There's money all over the place. Those are the 5 ways, folks, to create money. It's not just the small one is the Fed. Hey, have a fantastic weekend. Thanks so much for being here. Be safe out there. We'll look forward to seeing you on Magical, Magnificent, Marvelous Monday. Take care, folks.